Earnings season ends with a bang, but the experts don't think it can last. Aussie Post pushes to close more branches, saying it's easier to buy a stamp than bread. And how much money you need to be really, really rich. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 4th of March, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, you have an absolute ripper of an interview with Grady Wolfe from Bell Direct.
I do indeed. We basically go through Grady's top 7 picks for the market. Now, we're not an investment podcast, and we stress you should seek professional advice before making any investments. So keep that in mind. But we talked to Grady about the 7 stocks she likes most, and she explains why she likes them. Well, listen to the interview to find out what they are. But one of the, I suppose, common themes is they're kind of everyday stocks that, in this case, Grady actually understands because they affect her life. And I think that's part of the reason she likes some of them.
Yeah, doesn't that go back to Warren Buffett's principle of kind of only invest in things that you understand or something like that? But it's a pretty straightforward principle, isn't it?
Yeah, it is, and just makes all sorts of sense. However, of course, the thing about the Warren Buffett story, he then didn't invest in tech stocks, and he's been criticised for that. I don't understand how a smart chip works. I would never be able to invest in NVIDIA.
That's a very good point.
Yeah.
Anyway, have a listen to Grady Wolfe's interview. It is coming up after the show. It is, we did kind of put her under some pressure to come up with the 7 stocks that she is watching, and it was just a really good chat. So stick around for that one. And it is tied to the main story this morning, isn't it, Sean? Because earnings season is over, and it finished with a bit of a bang, given overall it was a pretty ordinary performance by corporate Australia.
I think that's right, Michael. The number of companies beating earnings expectations was way above those missing expectations, 46% to 36%. Though it must be said, expectations weren't particularly high to start with. Expectations are for a 5.5% drop in full-year earnings to the end of June, with just under half of all companies reporting higher profit this half year, according to AMP Chief Economist Shane Oliver. The number of companies upping their dividend was 53%, and that's lower than normal, and those cutting payouts, 31%, is higher than usual. The energy sector is leading the way in terms of reduced profitability thanks to lower prices, and bank profits are slipping just a bit. The gist of earnings season, revenue growth has slowed, reflecting the weakening economy, and higher interest expenses are biting, i.e. higher interest rates. But cost control is good, really good, and wages growth is expected to have peaked. As Dr. Oliver puts it, results are better than feared, but profits are still likely to be down this financial year.
All right, so earnings were a bit lackluster, yet still, Sean, the S&P ASX 200 hit a new record on Friday.
Yes, there's a fair bit of optimism out there, notwithstanding some of those results. Some pretty big stocks are up around 50% or more over the past year, and that's really driven the market. Goodman Group is a good example. James Hardie, a bunch of tech companies, WiseTech Global, REA and Xero. A bunch of retailers have also done well, up in that 30 to 40% range. JB Hi-Fi fits in that category. Wesfarmers, the conglomerate, Harvey Norman, Lovisa, Breville, and then there are the heavyweights of the banking sector. Westpac, ANZ, National Australia Bank and Suncorp are all up around 20% over the past year. Can it last? Well, going back to AMP Shane Oliver, he says easing inflation pressures, central banks moving to cut rates, and prospects for stronger growth in 2025 should make for okay investment returns this year. However, shares historically tend to fall during the initial phase of rate cuts. There's also a risk of recession, and valuations aren't factoring that in. Taking a more democratic approach to your question, Michael, what's going to happen? A CommSec poll on X found 46% of investors expect the Australian share market to rise in the next 6 months, which is actually the lowest reading in about 3 months. The majority now see the market flat or down.
Sean, just speaking about that, the record for the ASX 200 on Friday, that featured in a video that you posted to our social media, to the Fear and Greed social media. So check out Instagram and TikTok. You just search for Fear and Greed podcast on those platforms.
I don't want to admit it, Michael, but there was a mistake in the video.
Oh, was it the number?
Because we posted it right at 4 p.m. But of course, the markets takes 15 or 20 minutes to settle. And so we posted it at 7,740 points, and the video says it closed at a record high today being Friday, 77.40. But in actual fact, there's always like a 20-minute settlement period. So by the time that was done, it was even higher. It actually finished at 77.45.6, which is up 0.5% of the day.
Well, I just figured, Sean, that it's social media you kind of round down. And really, Sean, if I'm being brutally honest here, I don't think anyone was paying attention to the numbers. I think everyone's paying attention to the fact that you roped your dog, Flo, into appearing in the video as well. And she was so well behaved.
Well, excellent investor, Flo. Big fan of gold stocks, being golden herself. She kind of puts up with me, Flo. She was looking at me and I'm thinking, what am I going to do on social media? And she kind of jumps up next to me. I thought, let's do it together, Flo. And we did.
I loved it. I loved it. And it's got a very good reaction on social media. So go and check it out. If not for Sean, do it for Flo and chuck her a like. Sorry, Sean, I interrupted you. You were going through the local markets, how everything finished on Friday. We know it finished at a record high, and we got the number slightly wrong on social media, but it was actually, 746?
Yeah, 77.46 points, which is definitely a record close. BHP pushed the market higher. Of course, the big Australian is the largest company on the ASX. So when that finishes up 2.3%, well, you're going to have a pretty good day. Fortescue Metal and Rio both closed up 1%. The banks were up, led by ANZ's 1% jump. Woodside and Santos, the energy groups, were also higher. Woolies and Coles both outperformed. Wesfarmers didn't. It dropped. Others to fall back included CSL, Macquarie, Telstra, Transurban and WiseTech Global. Now, we can expect the market to open slightly higher, according to futures trading. There's plenty of economic news around over the next 5 days or so. The big one, of course, is the economic growth figures for the December quarter on Wednesday. The consensus among economists is for just a little bit of positive growth, let's say 0.2% or something for the December quarter. Of course, when you put that in real terms, take inflation into account, that means on a per capita basis, we actually probably went backwards. Anyway, we'll find out more about that on Wednesday.
All right, checking international markets now, and this is thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. And how about Wall Street, Sean?
Yes, it was another record finish over the weekend for both the tech-heavy NASDAQ and board-based S&P 500. Notable was NVIDIA, which finished with a market cap above $2 trillion for the first time. It had been over that mark, but it had never closed above the $2 trillion mark. Its shares are up more than 65% this year, the third largest company on Wall Street nowadays. Oil's also higher, with Brent trading above $83 a barrel. Gold's higher. It's fetching, it's not actually that far off, $2,100 an ounce. Bitcoin's worth almost $62,000 a unit. Basically, everything's higher except
the Aussie dollar.
The mighty Aussie dollar. Yeah. 65.3 US cents. Now, I have a theory on this. Can I explain?
Oh, God. Yeah, please go on.
As you know, one of my kids is studying in the US, and we're helping him out financially because he obviously has to pay fees and things like that. And the dollar, the day that we agreed to that and worked out the payment plan and that, it's this monthly payment plan for him to study over there, the dollar went from, it was like 67 or 68 to 65 and hasn't moved since. Not happy, Jan.
So you are to blame.
I totally am to blame. So Michael, as you know, I'm going to Indonesia, to Bali in 3 weeks' time. Sell every rupiah you have. Absolutely get rid of it. And then when I get back in 4 or 5 weeks, buy up big.
You really have become bad luck, haven't you? All right, we'll be back in a moment with the rest of the day's business news. Sean, the federal government has retained the seat of Dunkley in Melbourne in the weekend's by-election, though it suffered a 3.6% swing against it.
It was pretty much as expected, and given the seat was previously held by the ALP on a 6.3% margin, the outcome means the electorate now becomes winnable for the Libs at the next federal poll. The Liberals claimed it was a vote against the government's handling of the cost of living crisis. If so, it wasn't exactly a severe vote against it. In any case, Victoria's a very tough state for the Conservative parties. Queensland's an easy state. Queensland's a tough state for the Labor Party. But Victoria is a tough state for the Libs. So all in all, kind of came in as expected. It's a pretty good weekend for the Prime Minister as a result of retaining that, apart from his beloved and my beloved Rabbitohs losing over the weekend in Vegas. Mr. Albanese hopes that continues. He is hosting a special summit to celebrate 50 years since Australia became ASEAN's first dialogue partner. That particular summit kicks off today in Melbourne.
Sean, Australia Post wants to close more of its 4,271 branches after announcing a record peak of almost 100 million parcel deliveries over summer.
Boss Paul Graham points out that with so many branches, there are more post offices than Coles, Woolies, Aldi, IGA and Foodworks combined. His point, it's easier to buy a stamp than a loaf of bread. Nice analogy. Under current regulations, Aussie Post must have a location within 2.5 kilometres of every citizen in metropolitan Australia. Mr. Graham wants that dropped, and Australia Post is trialling new formats like the first community hub in Orange in central west New South Wales. The business announced a $33 million profit for the December half year on Friday, with letters in decline. Volumes were down about 12% over 2023, but parcels and services are doing better. The group also achieved $141 million in cost cutting. And just so you know, Michael, I'm sure it's very relevant to your life, stamp prices are also set to rise from April 3 to $1.50 for a normal stamp from $1.10. They rose 10 cents last year. That means in total, they will be up 40 cents to $1.50 in a little over a year. A bit rough, I reckon.
Yeah, well, look, Sean, it's funny. I reckon I go into my local Australia Post semi-regularly, and it's usually to pick up parcels that we weren't home to accept delivery of. And I remember when, if you were going into Australia Post, you needed to allow kind of a half-hour window because you would always be standing in a line. Now I go in there and it is a ghost town. There is never anybody in there. And I don't know why that is.
Do you go into a branch?
Yeah. It's a proper Australia Post kind of outlet.
Because my local newsagent is our closest branch. So they always have the parcels, which makes a lot more sense to me.
Yeah, I mean, and I can kind of understand the logic behind kind of shutting a few of these down, or making it possible to actually shut a few of them down, because there is never anybody. And the other day, there was actually an argument almost broke out between the staff in there over who was going to get to serve me, because it's not like they were that excited to say, "Oh my God, we've got a live one."
He's back.
Anyway, Sean, auction clearance rates came off further over the weekend, though they remain well above the level of last year.
The national preliminary clearance rate came at just under 72%, down from 73.5% a week ago. Clearance rates have been softening the past 3 weeks, and with the average downwards revision between the preliminary rate and the final clearance rate of about 6 percentage points, the final number is likely to come in around 65 or 66% for last week. It was the second busiest week for auctions so far this year. Sydney came in at nearly 77%, Melbourne at just over 70%, Brisbane at 65%, Adelaide 69%, which is actually relatively low for that city, and Canberra at 64%, which is actually relatively high.
Big tech, Sean, is setting itself up for another fight with legacy media companies, with Meta, which is, of course, the owner of Facebook and Instagram, saying it will no longer pay for news content on its platform.
Meta will remove its Facebook News tab in Australia from April. Users will still be able to post and share links to news stories, but it won't be negotiating deals to compensate media companies. In its words, Meta wants to invest in products and services that drive user engagement. Ouch. And as a result, it won't be entering into new commercial deals for traditional news content in Australia. Now, those contracts are believed to be worth around $70 million, a fair chunk of money for the legacy media groups. The other big platform, Google, is taking a different tack. It has told Assistant Treasurer Stephen Jones that it intends to proceed with renegotiating deals with publishers. The two have signed more than a dozen contracts with Australian media companies under a code introduced by the government, paying lots of money to News Corp, Nine Entertainment, Seven West Media and Guardian Australia, among others. Those deals are set to end this year. That's why this is coming to a head. Now, Mr. Jones yesterday told media that he wants to take steps to force Meta to pay for content, setting up yet another battle between the tech giant and the local media groups and government.
And there's plenty of corporate manoeuvrings in Radioland at the moment, Sean, with three of Southern Cross Austereo's biggest shareholders supporting a move to oust the company's board and management after poor results and slow progress in evaluating a takeover offer from rival ARN Media.
Don't you reckon this is like the old-fashioned stoush?
Yeah, it absolutely is, because you just have these two big rivals, and it's got everything, and it's got the celebrity in there as well, because you've got kind of Kyle and Jackie O involved in all of this kind of stuff, and you're just like, there's so many kind of big names involved in this, and it's traditional media as well. It's radio. It's got it, and I love radio, but it's just got everything in it.
So late last week, Spheria Asset Management said it would call for an extraordinary general meeting, and fellow Southern Cross major shareholders Alan Gray, the fund manager, and Ubique Asset Management backed a push to remove the board, according to the Financial Review. Together, the three account for more than 25% of the share registry. Now, ARN, which owns 14.8%, is expected to support that push. ARN, which owns Kyle and Jackie O, as you just mentioned, at Kiss FM, Pure Gold radio brands. It bid for Southern Cross last October, along with a private equity group, Anchorage Capital Partners. That proposal involves dividing the radio networks between ARN and Anchorage. ARN would take Kiss and Triple M and 88 regional radio stations. Anchorage would own the Pure Gold and Hit brands, as well as a bunch of regional stations and a regional TV network. So that was that deal. It has really been moving at a very, very slow pace. Now, Southern Cross Chair Rob Murray defended his handling of that bid, saying his side has been constructive, but still didn't have the commercial details it needed to make a recommendation to its shareholders. That's something like 4 months ago, and three of those shareholders are getting a bit antsy about it, and so pushing to move on the board and management. Going to be a fun one to watch.
It certainly will. Finally, Sean, before we get to international news, I love this story. How much money do you need to be really rich? Knight Frank reckons to be in the top 1% of the wealthiest people in Australia, you need to have about $7 million.
Yeah. Do you make it?
No, just a little bit short. When I say a little bit, substantially short. How about you, Sean?
Well, you apparently have to be in the positive to even be talking about this, but some of us have massive mortgages, so I'm not even in the positive, you know?
So it's an aspirational thing for us.
Yeah, very aspirational. Australia now ranks 7th in the world for the money required to be in the top 1%. The exact amount to reach that mark is actually US dollars 4.673 million. This is a global survey, so everything's measured in US dollars. Australia was 3rd last year, 7th this year. Basically, that means this year you don't need as much money to be considered really, really rich. And you're in a club of 15,347 people, according to Knight Frank's The Wealth Report 2024. What do the rich spend their money on? Well, Knight Frank tracks the 10 most popular investments of passion. The one that did best last year was art, up 11%, followed by jewellery, where prices were up 8%. Then came watches, coins, and coloured diamonds. What didn't do well was rare whiskey, which dropped in value by 9%. I reckon if you've got enough money to be investing in rare whiskey, you have to take the ebb and flows on that one.
It feels like we're getting into very niche investments here. Coloured diamonds. Goodness me. In international news now, Sean, Israel has, quote, basically signed on to a 6-week ceasefire that would be used to facilitate a second round of swaps of Israeli hostages for Palestinian prisoners, according to a senior US administration official.
But the Financial Times is reporting that there are still several hurdles before any deal can be agreed, including the hostage-to-prisoner ratio that Hamas and Israel agree on, and a long-standing Hamas demand that a permanent ceasefire come into place after almost 5 months of war between the Jewish state and the Palestinian militant group. An Israeli official said it was awaiting confirmation of how many hostages remain alive and the identities of those Hamas is willing to release before sending delegation to Cairo, where the talks are due to be held. The US officials said there will be a 6-week ceasefire in Gaza starting immediately if Hamas agrees to release the defined category of vulnerable hostages: the sick, the wounded, elderly, and women. Now, talks have been complicated over the past couple of days by a very vague announcement by Hamas that as many as 70 of the 130 or so hostages it's said to be holding, they said that they'd been killed by Israeli airstrikes and shelling. They kind of hinted at it, so that is complicating matters, obviously.
And finally, Sean, a commercial ship attacked by Houthi militants in February has sunk in the Red Sea, risking an environmental disaster in the area.
Yeah, so the Belize-flagged Rubimar was carrying 41,000 tonnes of fertiliser. And it sank over the weekend in international waters following heavy winds. The vessel's been taking on water since the mid-February missile attack by the Houthis, which forced the crew to abandon ship. US Central Command last week said the attack had caused an 18-mile oil slick, but the spillage of the 41,000 tonnes of fertiliser could actually worsen the environmental impact quite significantly. Michael, crap everywhere.
Yeah. That sounds like an absolute disaster. All right, up next is the Fear and Greed Daily interview. You're speaking today with Grady Wolfe from Bell Direct.
All about the 7 stocks she thinks you should keep an eye on during 2024. If you're interested in investing, if you're not interested in investing, you're just interested in business, certainly well worth a listen.
Yeah, it certainly is. And of course, we're not an investment podcast. You should seek professional advice before making decisions. But Grady just has some really interesting things to say about a lot of these stocks and these companies and just basically how they fit into her life as well. So it's interesting from that perspective. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And after you listen to Grady, go and listen to Fear and Greed the week ahead with our resident economist, Stephen Koukoulas.
Absolutely. He's very excited this week. We've got economic growth figures out. In fact, there's a bunch of partial indicators out this week. Obviously, economic growth for December quarter is a big one. He's very enthusiastic about what's going on in the economy at the moment, Stephen.
Yeah, he's always enthusiastic, isn't he? He's a very he's a passionate economist.
Yes. Is there any other time? Maybe there is.
Yeah, that's Fear and Greed the week ahead. So some good listening coming up after the show. Thank you, Sean.
Thank you, Michael.
It's Monday, the 4th of March, 2024. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, TikTok, X and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.